are here with a 10-minute timeline, I'll straight away, go towards the crux of the topic, which is basically digital lending and how it has evolved in the country and where are we sitting right now. If I have to talk, first of all, how the evolution has been. So it's a very, I would say, self-explainable answer. But just to give you a quick crux, we have moved from a stage of an in-person loan application where it used to take, probably months time to get an approval on us. We have moved towards a stage. From there, we moved to an online application where I was given a digital platform to apply, but I was still, sitting at multiple days of approval. Now, when I say approval is basically a first level of consent from a lender that, we are okay to go ahead. Currently, we are sitting at a stage where we have gone paperless in terms of credit delivery. And, that happens in seconds or minutes also. Recently, one of the private banks launched a seconds personal loan scheme also, and it's happening. I think everywhere around you are able to, validate the statement that now we are able to provide a credit delivery in a minute's time. But how exactly that is happening in the country? How have we reached to this stage? And, what is the way forward? I'll try to, deliberate more on this. Let's talk about, credit as a paperless activity. There are some components, key components in the loan life cycle if I talk about. So, the first would be your customer onboarding. So when I say customer onboarding, it has now been digitized to a layer that, we get online applications. If we are a new customer to that specific institution, we get pre-approved offers if we are an existing customer to that institution. A lot has been able to do with the launch of, I would say, digitization of the data in the country, where we are able to validate a customer through a instant KYC. So if today I'm reaching out to any lender, be it I'm a retail or I'm a corporate borrower, I'm still able to validate my statement and I'm able to validate myself as an organization also. So it's all happening in real time. So I would say your basic inclusion of KYCs and your induction of video KYCs on digital platforms is what has led to a digitized customer onboarding. So this is a first step, but one of the most crucial steps, because if this is not automated, then nothing further can go in an automated manner. So if I talk about the second step after the customer onboarding was basically a document exchange, where everybody requires a certain amount of data to validate you and validate your proposal, and where exactly are you going ahead with respect to your worthiness. On the data I would say exchange part, we have taken a very leapfrog jump where we have gone into a layer where we are able to fetch the information from a public domain source which have been digitized by the government, or we have been able to I would say build tech algorithms around it so that the data can be read digitally and the data can be inferred in an automated way. That's very important. Now these data can be very, very complex documents at sometimes. It can even be your financial statements of an entity. It can be my GST returns, anything, to do with a credit appraisal eligibility check which is there. But once this data fetching capability with the consent layer which has been launched by the government, we have solved that. The next layer basically was for parsing different types of unstructured information into a structured amount of data. So that is also now been possible. So, we have, I would say, reached to a fair amount of accuracy when it comes to parsing different financial documents and making it ready for the analysis to be ready. So the next big thing, which was the data exchange after the customer approach, has also been digitized in the country, and we are validating the statement that be it any type of a proposal which you have with you, you might go to the bank or NBFC to take a personal loan, or you might go to the same institution to take a working capital or a term loan or a business loan. Your exchange of documents is now pretty much settled at all levels, and we are penetrating deep into tier 3 level as well. The next part was, the most tricky part, where I would say that I have approached the lender, I have exchanged documents. Now, what is happening now is basically was the most time-consuming activity of the entire loan life cycle. Now, which was basically to calculate what was my eligibility and what is my worthiness. This is my application and this is what I should get from the institution. I would say the biggest disruption has happened in this space. although others were still very important to be done, but the biggest has been done in this space, and we have been able to crack this through, I would say, digitized analysis of different types of financial documents. Where now you have a system in place which analyzes, for example, a bank statement, which analyzes a GST return, which analyzes your ITR, a financial statement, it fetches your legal domain information, everything is digitized and you get a response in minutes. And this response directly reaches out to the back end of the lender. It doesn't, as a customer, you have just on a screen, and in the back end, these are parallel activities which are happening. So as I'm moving on to a journey, in the back end, there's a whole amount of data analysis which is going around for me as a customer, and I'm not aware of that. I've just given a bank statement into a platform. I don't know what is happening with that bank statement in the back end. Now in the back end, that bank statement is getting passed, it is getting analyzed, it is giving the certain amount of parameters which are required as per the credit policy of that institution. And all that happens in seconds. So, this is a stage where we have reached when it comes to, taking credit in the country. That has really grown up. The next part basically was, I would say a business rule engine which is to be run. So business rule engines are again getting automated. So everybody used to have a credit policy internally at a central level, then at a zonal level. If I talk about any type of a lender in the country, now that has all gone to a strong middleware solution, where the lender knows that what is a profile of the customer which they are looking for, what is a profile of the customer from a financial appraisal angle, from a business risk appraisal angle. All that are different parameterized way of scoring a customer. Now, when we say parameters, these are certain important, crucial parameters which will come from the previous step, which is the analysis. So when the analysis reaches to a bank or an NBFC, picking up those crucial elements from the analysis and taking a call on the customer is now what is happening. Earlier, it used to be that, everybody used to have an internal rating policy. There were multiple levels of hierarchy. A proposal used to move from one desk to another desk to another desk, or I would say from one level to another. But now all that has been centralized and it has been parameterized at a institution level, not just, at a, I would say, a product level. So every product of the institution, they know what is the right amount of worthiness which is to be looked into a customer. Now, while this was getting done, I am able to get an in-principle approvals on the go itself. So if you move into an application, be it an application starting from 5,000 rupees of a BNPL application to maybe 5 CR of a working capital requirement, you are able to get this right at the time of application. You don't have to wait for a decision nowadays. The next part, basically, once you're given a sanction, is there are certain documentations which are exchanged, there are terms which are discussed, there's negotiation on ROI, tenure, etc. Now, while that is happening, we launched e-signing, and that also became a paperless activity. There are certain states which are still to go live on that, but majority of the states, we are able to get an e-sign document if it is an unsecured loan. It's a completely STP journey. There's no requirement for any document to be presented to the customer. All that flows straight through, and everything can be, I would say, just at a click of a button. Using an Aadhaar-based e-signing, you are able to validate that you are in concurrence with the offer which has been extended to you as a customer. Once that happens, straight away, basically a line of activity, which is an internal call, goes to the internal systems where we are able to validate you as a customer, and we say, now we are at the right point of time to disburse money into the account. So just in 5 to 6 parts, we have eliminated the entire left-hand side on the customer onboarding. There was document exchange, there was eligibility checks, an internal credit policy, then documentation, negotiation, taking the customer and making him agree to the final disbursement. Now all that has moved towards a complete platform-based strategy or even a mobile app-based strategy as well. Now, when I talk about placing ourselves in the right way forward, so where do I see basically is there are certain important growth drivers which have come to us, and we all have created this growth drivers for the economy as a whole. The first part has been talked about by a lot of speakers before this, where what is a regulatory push which is going towards this, the introduction of account aggregation, introduction of India Stack, specific fintech based committees at the central level, apex bodies taking a serious note on this. The second part is basically technological innovation, which again has talked about. You see several names on a daily basis. What is a kind of new age innovations which are entering into the credit delivery space. The Third one basically is, and interesting, I would say, internet penetration on the smartphone side also. So we basically are the second largest market when it comes to internet penetration and smartphone usage across the world. That is again a huge opportunity to introduce this entire layer of digitized lending in the country. Now from that note, when we move up, we look at a demographic advantage. And when I'm saying a demographic advantage, we basically have, I would say, a huge advantage when it comes to our age, that what is the percentage of the income based age which are there. So we are currently sitting at 35 in that, and every year we'll be adding a good amount of middle income and high income households in the country. So that again is an opportunity for all the lenders in the country. And product innovation is something which is bound to continue. That will never stop. So we will look at all those new age products which are getting launched in the country as well. So just 2 more minutes I'll take on taking your I would say interest, that all of us, when we talk about digital lending, we only see when we are applying to an institution for a credit. But digital lending is not only limited to new customers looking for credit, it is also a very, very important aspect for the existing customer base. See, if we talk about the existing customer base of banks in the country or NBFCs in the country, the amount of digitization which is required is even more than what is required for the new to customers, because new customers are still aware of how the consent layers are working, how the data is getting exchanged. But the ones who have already been onboarded by them, it is very difficult to bring them onto a digitized way of lending. So one important example which I can share with all of you is, although on the retail side you all see POS-based lending, BNPL, salary advances, loan, you getting better profiled, taking on a better ROI from the bank. But one use case which we have evaluated, basically we call it Sampan. It is basically just simplified analysis of MSMEs using PAN, where we only take PAN as an input, and basis the PAN as an input, we are able to give a auto renewal for a working capital. So working capital is, I would say, the most advanced level of adoption in the country, where everybody requires a working capital CC limit from a bank or anybody. When you have to go for a renewal, so currently we are sitting at a stage that the bank has to do the same amount of activity for renewing you as a customer versus giving you a fresh limit. So there was no change in that. So we kind of digitized this, we made it more parameterized. We basically made an on-prem installation with the banks, where we are able to analyze the transactional data of the banks at their premise. So the good part with the banks were, they were very, very sensitive on the existing customer data which they have with them. So we said, you don't have to worry for that. You just make an on-prem installation. The system will automatically analyze the entire existing data. It will give you the limit utilization. It will give you the usage patterns, and you will be able to validate whether a customer is able to basically grow the business to an extent where the limit should be enhanced, or the business it as a pretty standard growth where it should be the same limit, or he should not be renewed. Now, all this activity of renewing a working capital customer in the banks where we have implemented this happens 1 month prior. So which means this is the level of proactiveness which the major banks in the country are going with. So if you are sitting in the month of May, the customers who are due for renewal in the month of June have already been analyzed, and the bank knows how many customers are to be renewed and how many are not to be renewed. And all this is happening where it's completely paperless, where you as a customer are not even aware that there's an analysis of your own data which is happening with your own bank. So this is the kind of new age innovations which are happening in the country, and I think this is something where on the retail side was already happening, but now B2B space is highly picking up with more and more consent based layers being made available. So this is, I would say, a big market to look at. And I would say next is basically more to do with an existing loan. So where everybody sees that whenever you log in into a net banking account, you see there are some pre-approved offers which are given to you. Now the basis of those pre-approved offers is not just your transactions, it is basically the entire amount of data which is getting analyzed in the backend for you as a customer. So all this activity has taken a complete digitized scope, where for the existing customers we are giving that up. So this is basically, a typical diagrammatic view of a digital lending platform. How does it look like? So basically, it takes into account a customer onboarding engine, which I talked about, then your data fetching and analysis, integration with the backend systems of the bank, And all of these steps basically can be replicated for any product in the country. It is not only limited to certain products. It can be for retail, it can be for business loans, and it's a very, very simple adoption of do it yourself. If you have any questions, I'm here free to address that. But I think so, this was a subject which was important to be discussed on the lending side, while we have talked very much on the payment tech side. So thank you.